Markets are trading in the red, down by about 1%, and that is on account of commentary that is coming in from Fed officials that seem to suggest that a rate hike in September cannot be ruled out, is on the table, or perhaps should be on the table. Let's go across now and speak with Paul Schatz, President, Heritage Capital. Paul, appreciate you joining us. You know, the market seems to be reacting to Eric Rosgren's speech where he's spoken about low interest rates increasing the chance of overheating the U.S. economy. Seems to suggest that perhaps the rate hike in September is not completely off the table. How are you reading this?
Well, first I have to laugh whenever I hear the Fed heads out and about, because they keep worrying about this bogey that's not out there. They keep worrying about an overheating economy, and they keep worrying about this inflation specter. I mean, wage growth just began to tick up. We have essentially historically low inflation, and nobody I know on earth would accuse the U.S. economy of being overheating. I mean, it's not even warm. So I think the Fed, frankly, is doing their best to try to jawbone the markets. They want to raise rates so they can lower them next year. I think the whole thing is nonsense.
Speaking of whether the Fed truly is going to hike or not, or what you mean about overheating, we've also got Fed Governor Daniel Tarullo on CNBC saying very clearly that he wants to see more evidence of inflation before raising rates. So there seems to be a difference of opinion within the voting members of the FOMC.
Yeah, and that's something we've had, frankly, all year, and we had it last year. We've got a very split Fed. But what's really interesting is that I believe they're going to follow whatever Chair Yellen says behind the scenes. And certainly in interviews and in her press conferences, she's been, somewhat non-committal. She's kind of waffled very mildly from no hike to hike, but she's not taking a stand. And I think that when push comes to shove behind those closed doors, they're going to fall in line with whatever she wants to do. But I think they're probably going to raise a quarter point for one time the rest of the year, and that'll be that. Market reaction, I think, is overblown. We were long overdue for a little pullback. It's the first 1% down day since post-Brexit. I think the market looks looking for an excuse to pull back a little bit, and it got it.
If indeed there is a rate hike in September, not December, as is being anticipated at this point in time, the markets does seem to believe that there will be one. But if it's September, how do you see the markets reacting?
I think if it is September, the markets will react well in advance of the actual news. It'll be, sell the rumor, buy the news. So, I mean, what you're seeing right now is, you're seeing in the U.S., staples are breaking down, utilities selling off. You're seeing REITs lower. And obviously you're seeing that the bond market, 2 straight days of getting hit very hard. So you're seeing this anticipation of the market worrying about a potential rate hike. I don't think the Fed will raise rates per se and then stocks will fall on it. I think they're going to do whatever they're going to do based on the hike into the meeting, not after the meeting.
All right, Paul, we'll have to leave it there. Is the Fed boxing itself into a corner? Is this now about the Fed's credibility? And are we likely to see a rate hike in September or perhaps in December? Those are the questions the Street is looking to answers for.